In this video, we are going to analyze the ES or the S&P 500 futures for Wednesday, July the 24th, 2024. Guys, it is our trades back here with another video. I want to thank you for joining me. And guys, it was a big day on the market today, so I've pulled up we'll start with the weekly price chart, guys, or no. We'll start with the monthly price chart, and we will move our way down, guys. So we're going to move through the time frames here on the MES and just tell you what I am seeing, guys. So first off, let's bring up the average true range on the monthly chart. So average true range on the September contract is not going to give us a big thing on the monthly chart. Let's start with our monthly candle and what it's looking like, guys. Monthly candle, 259 points. We're currently sitting down a 259 and a quarter point range. That is 1,037 ticks. Coming into the month of July, it looks like July is going to be our first down month following two large up months. It's looking like July is going to have a bit of an upper shadow or an upper tail. So it's sort of looking like, guys, I think that July's candle, with that point of control sitting above current market price, and with the way that the July candle is starting to print, I want to say that from a monthly chart perspective, I'm seeing a little bit of a downward bias. Now, let's see from an ICT perspective what I'm seeing on the monthly chart. Let's bring up the 50% tool, guys. So we've got an ICT order block here. And I think, guys, I think the S&P 500 is headed for, just looking at the monthly chart perspective, I think that monthly chart could bring us back down to 5,000. Let's see. I want to bring the price label to the label right. Okay. We're going to save that. Drawing template as a red 50. What I've marked out here is the mean threshold of what I believe to be an ICT order block, which in layman's terms, an ICT order block is a pivot point. So I'm looking at where the market had previously pivoted, and instead of taking the wicks of that candle, I'm taking just the body of the candle. And I'm thinking that the market is going to want to come back down to where the market had pivoted here back in the Monday, the 1st of April. The idea is that if the market has pivoted at that level in the past, then it's likely to pivot at that level again here in the future. So I personally think, let me see if I want to just bring that to the center. Okay. Center might be all right. Let's see if the center is what I want to do. Center. Okay, guys, so what I'm seeing here on the MES, on the monthly chart, I think that we've only got what? We've only got 2 weeks. No, we've only got 1 week left here in the month of July. I think the month of July is going to prove to be a black candle. Now, if we were to have some sort of a rally here in the final week of July, this thing could end up being like a doji candle. But either way, guys, it's kind of looking like the market put in its top at 5,721 quarters. Guys, I'm saying that looks like a market top to me. If I had to take a wild guess, I'd say that 5,021 quarters is very much looking like a market top. So the very beginning of my analysis, starting here from the monthly chart, is okay. I think that the July candle is likely to be a down candle. I think that we're looking at an attempt to move lower, potentially below that 5,000 level. All right, let's get on the weekly chart, guys. And let's see what we're seeing here on the weekly chart. So number one, guys, we're having a pickup in volatility, which is both good and bad. But looking at the average true range, guys, here on the MES, we're now up to 124 points per week, which is quite a bit higher than where we were at before. The volume profile point of control currently sitting higher at 5,568 3/4. So from a volume profile perspective, the point of control is sitting higher. We reached our all-time high there of 5,721 quarters, and we reached that last week. So we have 2 weeks left here in this trading week. We've got durable goods orders, GDP growth, We've got news coming out on Friday. Core PCE, price index, personal income, and personal spending coming out on Friday. Guys, we could potentially see this candle move all the way down lower. So let me quickly here on the weekly chart draw out the ICT perspective, guys. So I'm going to draw this out from an ICT perspective and then let you know what I'm thinking. So buy side liquidity, sell side liquidity. I'm going to call those 2 weeks an order block. We're going to call this a long wicked candle. I call that a long wick 50%, guys. And point of control is higher. Do we have any fair value gaps? We've got a fair value gap here. Okay, fair value gap there. Okay, guys, so what I'm seeing here on the weekly perspective is we have sell side liquidity down at 5,267 evens. We have an order block, just taking the wicks of these two black candles from the Monday the 20th of May, and then the Tuesday the 28th of May. Just taking those 2 weeks and taking the bodies of the candles, the mean threshold or the 50% point of these two candles is 5,376.50. From an ICT perspective, the market should be interested in coming down to the mean threshold of that order block. Also, we can see that there was something of a bounce on the fair value gap that we have between the weeks of Monday the 3rd of June and Monday the 17th of June. So we did get a market reaction off of that. Now, that's from a weekly perspective. We're working on 2 weeks straight lower. If I had to take a wild guess, guys, what I think, looking at the weekly chart perspective, is I think next week we move back higher up to maybe the 5,535. So, guys, I think from a weekly perspective, the market has, what have we gone down now? Our total range. Let's bring up the measuring tool and let's see what our total range is. 167, almost 3%, guys. Let's see where we're off from our high. So we are currently sitting down 4.12% or 235 ES points off of our high. So I would venture to guess, guys, that I think we're going to have a relief rally next week. But I think that we are going to close out Thursday and Friday here. Thursday and Friday. Probably going to end the week with a black candle. Okay, guys, let's move down to a daily chart perspective and then show you what I'm seeing here. All right, guys, so I'm going to start, as always, with the buy side and the sell side liquidity. So just get used to redrawing these things. So buy side. Now, guys, I want to mention we have, let's see if that is on that template. No. Okay, guys, we've got sell side liquidity located at 5,462 quarters, buy side liquidity up at 5,721 quarters. We have a long wick inefficiency here, so that long wick inefficiency at 5,481 halves. We've got an order block sitting higher from a daily chart perspective. I'm going to show you the mean threshold of that. Mean threshold of this order block, 5,586 quarters. So I would say from an ICT perspective, guys, the market is looking to run on that sell side liquidity 5,462 quarters. Now, once it gets past that sell side liquidity, the question becomes, where's our target? Well, I think the target's going to be at first the mean threshold of this order block, or around 5,422 evens. So, guys, if we have a look on the daily chart perspective, notice that we have sell side liquidity and we have sell side liquidity. We have equal lows. So, from an ICT perspective, guys, I think that the market is looking to run below 5,462 quarters and to run on that sell side liquidity. Now, before it does that, let's say that the market wants to move higher. What are some levels that I'm looking at? Well, guys, I'm seeing something of a inverted long wick inefficiency, or that 50% point. So guys, I think that if the market's going to rally, I'd first look at that 5,517 3/4. But overall, guys, I think even if we have something of a rally, the market's going to look to take out these these equal lows at 5,462 quarters. So in my opinion, from what I'm seeing, I think the market's going to run maybe Thursday or maybe Friday, going to run at least below that 5,462 quarters. My first target's going to be 5,422 evens, guys. So that's what I'm seeing from an ICT perspective. Also notice that from a volume profile perspective, guys, we do have the point of control higher. That would come in line with this trading range. And personally, I think that it's likely that the market could come back up and test around that 5,547 3/4. So if we're going to have a rally, guys, my first target would be 5,517 3/4. If the market wants to rally further, I would look at it coming back up to 5,047 3/4. If the market wants to plunge lower, my first target is 5,422 evens, as that would be the market running on these equal lows and running into sell side liquidity. Ultimately, guys, I think we are now in a downtrend, so even if we see a relief rally on Thursday and Friday, I think coming into next week, we are going to see further weakness in the ES, and that's my current market analysis. Obviously, guys, this is subject to change. Okay, guys, I want to thank you for joining me. This has been my ES market analysis here for, well, all right, let's go down to the intraday. Okay, guys, we are now going to go down to the intraday and show you the regular trading hours. I'm going to show you and analyze from an ICT perspective the trading day of Wednesday, July 24th, guys. So let's get down to a 10-minute chart. 10-minute chart's one of my favorites. Let's break it down into the 3 sessions, guys, which is going to be the AM, the lunch, and the PM session. AM, lunch, PM. Okay, guys. And then this is going to be our RTH gap. Okay, guys, so what I'm showing you here on TradingView is I'm showing you the trading day for Wednesday, the 24th of July, 2024, from the regular trading hours. I've outlined the regular trading hours gap, and then I've shown you the AM session, the lunch session, and the PM session. And starting out, let's move down, see if I can find, let's go up to an hourly chart and see where our sell side liquidity was located. Sell side liquidity ran. Sell side liquidity ran, and sell side liquidity was also run here. Okay, guys, so what I'm showing you here on these drawings is I'm showing the regular trading hour session, starting with the regular trading hours gap, the AM session, the lunch session, and the PM session. I'm showing you the sell side liquidity, so for prior lows that the market ran on. And then, yeah, that's where we're currently at, guys. So as basically, guys, it was pretty much just straight down today. So we had a large regular trading hours gap. That regular trading hours gap came in at 43 1/4 points. So 173 ticks of regular trading hours gap. Basically, the market opened up straight down today, and it continued going lower all throughout the AM session. There were a couple small attempts to rally. So small attempt to rally at 10:20 that didn't work out. Another small attempt to rally at 11:20 that didn't work out. The market then ran on the AM session low. The lunch session, guys, as you can see, the lunch session was pretty flat. We did attempt to rally in the lunch session, but the PM session sold off again. So showing you from an ICT perspective in the 3 different time sessions, we'll show you that sell side liquidity ran. Okay, guys, so we can see that the lunch session formed a little bit of sell side liquidity that the market again ran. We ultimately made our low right at the very end of the day. Market tried to rally about 30 minutes into the close during the PM session. That failed again, and we ran further on more sell-side liquidity. So, guys, it was just a big sell-off today. A little bit of an attempt to rally during lunch. The PM session, we had a very late day attempt to rally that did not pan out as well. And now let's show you the overnight session, guys. Overnight session, coming into the Asian session for Thursday, the market is pretty flat, not wanting to move terribly. We've got a few different items that I want to show you guys here during the Asian session. So let's draw out the current market outlook. Okay, guys, I'm going to put buy-side liquidity up here and then show you. Okay, long wick 50%, and we do have a sell-side imbalance, buy-side inefficiency here on the 10-minute chart. 10-minute chart just happens to be my favorite. Okay, guys, so sell-side imbalance, buy-side inefficiency here that the market has been working through. Guys, I think during the overnight session that we are likely to head back down to about 5,467 evens. We do have a long wick. We also have a ICT rejection block here. So that's something that I would be looking out for as well. ICT rejection block located at 5,472 evens. We also have minor buy-side liquidity above 5,490 halves. Guys, what I'm seeing here in the overnight session is probably going to trade flat, but I do think that we dip lower before maybe we get something of a rally. From a volume profile perspective, looking here just at the overnight session, the point of control is sitting higher above that 5,500. So not too much I can say here in the overnight session, but if we do have a rally, I would be looking at something like 5,505 evens, which is right at our point of control. If the market wants to sell off again, then my first target would be that 5,467 evens, which is the consequent encroachment of this long wick inefficiency that we formed right before the stock market closed today. Okay, guys, that has been my analysis of the ES. It is Wednesday, July the 24th, 2024. If you like this content, please make sure to like, comment, and subscribe.